Hello, boys and girls. Welcome to the Dow Academy Online Learning. We look forward to seeing you all back in class. But for now, stay home, stay safe. And remember to always wash your hands with soap for at least 20 seconds. Let's begin.
Good day, students. Today we are going to discuss a topic in accounting which does not involve calculations. As students, we are simply required to identify transactions. The topic is capital and revenue expenditure or income. We are going to start by differentiating capital expenditure and revenue expenditure. Before we differentiate the two, let's start by understanding the term expenditure. What do we mean by expenditure? Expenditure simply means the use of money. Now, let's look at the difference between capital expenditure and revenue expenditure. Capital expenditure are all the expenses for acquiring non-current assets. For example, machinery, buildings, and so forth. This also involves all the expenses that a business incurs when it is acquiring those non-current assets. For example, the transportation of the non-current asset into the business. Capital expenditure also includes all expenses to improve the existing non-current asset. For example, when a business building is extended. Now we are going to look at revenue expenditure. Revenue expenditure are the regular expenses incurred in the day-to-day running of the business. For example, when a business pays its wages and salaries, repairs non-current assets, purchases raw materials or inventory, interest paid for borrowed funds. So that is the difference between capital expenditure and revenue expenditure. We are now going to look at the difference between capital income and revenue income. Before we look at the difference, let's understand what income is. Income are receipts of money received by the business. So what is the difference between capital income and revenue income? Capital income are receipts of money which arise not from the regular source of income. For example, when we sell non-current assets which were previously bought for use in the business. And revenue income, this is money received from the day-to-day running of the business. For example, money received from sales, commission received, interest received, and rent received. I hope this will be useful in the topic. Thank you.